Hello everyone, welcome to the Ichimoku.co daily markets review for the trading day ending Monday, May 11th. Firstly to the S&P 500, and here we've seen some selling coming into the market today, and that's off the back of the very strong bullish candle from the prior day's trading. A fairly large white body suggests strong upside momentum for the end of last week's trading. Buyers taking control, testing above the 2100 round number level of previous support and resistance, and this breakout certainly did suggest that it looked as though the buyers were building that momentum to breach through to that major high at 2125. They had closed above the 2114 level in a strongly bullish manner, but for today's trading we've seen the buyers lose that momentum and the sellers take control for today's candle by closing down towards the low and with the formation of a black body as opposed to the white body of the previous day. So the buyers have lost that strong push to the upside, and suggesting that we could see the market test back down to the 2100 level for the next day's trading. If we do see the market test lower, there is strong support extending down through to the Kijun-sen indicator trading about 2090, 2091, and then down through to the top of that highlighted yellow zone of previous support and resistance and the top of the Ichimoku cloud about the 2080 level. Now, even though the sellers have come into the market strongly today and they've closed with control, it certainly doesn't mean that we may not see the market eventually test up to that major high at 2125 and through there. There still is a possibility of that. But just reading the short-term dynamics of this candle, with the lack of strength from the buyers, it is suggesting that for the next day's trading we certainly could see the market just test to one of these lower levels and then eventually find support around these areas. Once again looking at the bands here, and again for the previous day's trading we saw the bullish breakout up outside of the upper band, and as you know I want to see confirmation of the bullishness. I want to see follow through with another strong bullish candle, and we haven't seen that. And if we look at the candles on the previous breakouts as they were testing up above here, strong rejection from above the band. And that's what we've seen for today's trading, with the market closing back within the bands and in that bearish manner, and suggesting that we could see the market trade lower. And if we do, looking to the middle of the bands at roughly about 2101, 2102 to hold as support, and then potentially down to the bottom of the bands about 2090 if the sellers are strong enough to trade down to there. Just looking at some of the asset class ETFs here on the daily charts, and the first to look at is GLD, the gold trust ETF, and on the left hand side we have the Ichimoku chart, daily charts here, and the market trading down below the Ichimoku cloud in a bearish manner, finding resistance at the Ichimoku cloud and selling off from there, suggesting that we have a negative market in all three time frames. Looking at the relative performance, underperforming the SPY, the S&P 500 ETF, and suggesting that this is certainly an ETF that we shouldn't be allocating to, and certainly should be allocating away from. There is potential for GLD to continue trending down, but we might find some support down around this swing low about 112.45. We could also find potential resistance once again up at the Ichimoku cloud for the next day's trading about 114.50, and we're likely to have the Tenkan-sen trading very close to that area as well. One ETF that had been strongly outperforming the SPY was the Vanguard Total World Stock ETF, and that does include the US, and it had been trading up above the Ichimoku cloud and the Kijun-sen indicator, finding support at the Kijun-sen and bouncing off there for the last couple of days. And we can see the very strong outperformance over the past month or so, leading into the last week, and then over the last week acting quite neutral and not outperforming the SPY. For today's trading we've seen some strong selling coming in, but finding support at the Tenkan-sen indicator at 63.50, so that's going to be an important level moving forward, as will the Kijun-sen indicator at 63.21. Looking next at the real estate ETF, the REITs, that excludes the US, so a world ETF for real estate, and here we see trading up above the Ichimoku cloud, but breaking out down below both the Kijun-sen and the Tenkan-sen in a bearish manner today, suggesting possible continued downside. Potential support down here at 31.27 at the Ichimoku cloud, and if we look at the relative strength comparative here against the SPY ETF, SPY is the code, that's the S&P 500 ETF, we see that we've been strongly underperforming over the past couple of trading days, and suggesting that this here also is an ETF that we should be allocating away from. Next to the Vanguard ETF, and this is the US real estate trust ETF, and strongly underperforming the SPY, the overall equities market, trading down below the bottom band here on a relative strength basis, and suggesting that it's very strongly underperforming the equities market, trading down below each of the Ichimoku indicators for some time, rallying for the previous day's trading and finding resistance very close to the Kijun-sen, but for today's trading the sellers coming back in strongly, closing with control with a close back down outside of the Tenkan-sen indicator, suggesting that we're likely to see this ETF continue trending down. And to the 20 plus year bond ETF in the US, TLT is the code here, and we see very strong downtrending price action over the last couple of weeks. For today's trading, no different. The sellers taking strong control once again. We did see something of a rally with the market finding resistance at the Tenkan-sen indicator. Sellers coming in strongly to close with strong control, and suggesting that we certainly could see further downside in this market. Looking at the relative strength comparative against the equities ETF, and we see very strong underperformance trading down below that lower band. Volatility here continuing to trend up very strongly up above the upper band. Could reach a cyclical high soon, so we could see the trend begin to weaken eventually, but there's no sign of that happening yet. This current candle is something of an extreme candle, so it wouldn't surprise to see a rally or some congestion. But at the moment, with this current candle, with the seller strongly in control, the next likely move is to the downside. And next, looking at the RRG charts with these ETFs and comparing them to the SPY, and we should be allocating to those that are in those upper quadrants, in the improving or in the leading quadrants. And if we look at these here that we've examined just earlier, they're in the lower quadrants, and it suggests that they're those ETFs that are underperforming against the SPY, the equities market, or they're weakening from an outperformance. And the first here is VT. It's in that weakening quadrant. It's pointing down sharply, and it certainly does look as though it's going to rotate very soon into the lagging quadrant. In the lagging quadrant, we already have TLT, that 20 plus year bond ETF, certainly the very strong underperformer here, and should be very strongly allocating away from the bond sector at the moment. And VNQ, the REIT ETF, the real estate ETF, similar to the bond ETF, in the lagging quadrant, and no sign that it's decelerating, that it's going to move back up into that improving quadrant. So they're the two that are very strongly underperforming the equities sector. And just having a quick look at some of the world stock market ETFs in their various countries. First here is a very strong outperformer. It's the Austrian index. EWWY is the code. And we see it strongly trending up above each of the Ichimoku indicators. The Chica span here is fully supporting the very strong uptrending price action. Had something of a pullback today, looking to the Tenkan-sen holder support. That's at $17.14, and looking at the relative strength comparative, and it's been trading up above that upper band for some time, and beginning to trend higher in terms of volatility, so suggesting that if the buyers can come back into this ETF as it potentially bounces off the Tenkan-sen indicator, we could see a resumption back through that swing high, and the second time frame uptrend continue back up on its way. The next to look at is EWH, and that's the Hong Kong Index ETF, and one that had been very strongly outperforming the SPY ETF, the S&P 500, the US equities market, and moving back to within the bands here on the relative strength comparative, and now starting to move just outside that lower band, suggesting that we have some strong underperformance and potentially a transition into a downtrending phase. We have the market still trading up above the Ichimoku cloud and the Kijun-sen, so an overall bullish bias in the longer term and the medium term timeframes, but certainly suffering some lack of direction in the short term timeframe, with congestion area forming over the last couple of weeks and forming something of a symmetrical triangle. So we're looking for a breakout and a close either down below the lower barrier or above the upper barrier, and if we see that close down below the lower barrier, we'll be looking to the support at the Kijun-sen indicator trading at 23.35, and if we breach through there in a bearish manner, we could see this ETF trade off fairly strongly over the next couple of days if that does occur. The South Korean ETF, EWWY, the South Korean equities market, is trading down below both the Kijun-sen and the Tenkan-sen, and it was one that was a very, very solid outperformer against the US equities market for about a month, and then began trading back within the band, so moving to neutral. And as we've now seen the bearish breakout down below both the Tenkan-sen and then over the last few days the Kijun-sen indicator, we've seen very strong underperformance, and with this fairly bearish candle today, sellers taking control, it does suggest that there is potential for this ETF to continue trending down, and potentially no strong support if we breach 58.41 until the market reaches down to roughly about the Ichimoku cloud, about 57.60. Looking over to the right hand side in the bands with this ETF, and we've seen the transition from that strong uptrending phase down into the strong downtrending phase with the strong bearish breakout down below the lower band. If we do see a rally, potential for resistance at the bottom band about 60.29, but certainly suggesting that there is good potential for the market to continue trending down in that medium term time frame. Another strong underperformer in recent days has been the Australian Equities Index. EWWY is the code, and 3 trading periods ago we saw a strong bearish breakout below the Ichimoku cloud, the market attempting to rally, and then for today's trading a very strong sell-off with the sellers taking control. Potential support here around the 22.40 level, and if the market does breach there in a bearish manner, we certainly could see the EWWY ETF beginning to trend strongly back to the downside once again. Relative strength comparative against the US equities ETF is quite strong now over the last few days, and suggesting that we could see a continuation of the trend to the downside, with volatility trending up strongly now, and potential for that to fuel the trend to the downside. But a lot depends on how this ETF reacts around the support at the previous swing low about 22.40. A strong outperformer here over the past couple of days has been the United Kingdom Equities ETF. EWWY is the code, and previously to the last couple of days trading, we saw a pullback occur. We saw bearish trading down below the Tenkan-sen indicator, and then the market testing to the Kijun-sen and finding support there and bouncing off there over the last couple of days in a strong bullish manner. Today, continuation of the trend to the upside, a white body candle, and trading very strongly above each of the Ichimoku indicators, supported by the Chica span, and also the relative strength comparative is confirming the very strong outperformance against the SPY ETF, with the relative strength comparative trading up above the upper band. With the bands here, the Bollinger Bands, 1 standard deviation on the right hand side, continuing to trade up above the upper band, suggesting very strong outperformance. And if we do see a pullback, potential for strong support at the upper band at 1943.